Welcome to this week's live ASX strategy session. Thank you for joining me. Great having you with me here for another show. And we do have a lot to go through. Lots of interesting things happening in the markets with the ASX 200 just below an all-time high, gold hitting all-time highs, movement in the US markets. And I've also got a couple of stocks I want to show you towards the end of the show. And of course, any stock codes you'd like me to go through, have a look at the charts, the technicals for those. Let me know at the end of the show and we will go through them as well. Now, as always, everything today is general commentary only, doesn't take your personal situation into account. Having been through all of those important things, let's jump into our first chart. Are we about to see a new all-time high in the ASX 200? I've got some charts to help answer that question, and what's particularly interesting is what's happening in the small ordinaries as well as the emerging companies index. I'll take you through those a little bit later. But first of all, starting with the ASX 200, looking at what we have here, I think this is a really interesting situation in that I want to focus on what's been happening since the December low. And what we have a series of strong rallies which have been separated by several short but sharp declines. And the most recent selling was due, of course, to the possibility of tariffs. And before that, it was Chinese AI, and before that, it was concern around interest rates. But look at what's happened after each of these sell-offs. The dip was quickly bought, and then prices have moved to new highs. So that's been the commonality amongst the sell-offs and recoveries that we've had through to now. I think this tells us a couple of things. Firstly, there's an element of nervousness amongst a lot of investors. It doesn't appear to be a complacent environment that we're currently in, and I think that's a positive. I think it's positive that investors generally do not seem to be complacent. The other point to note is that what these rallies off the lows are suggesting, to me at least, they're suggesting that it's suggesting that the dominant theme has been buying at the dips and not selling at the rallies, and that's bullish. It's telling us that there's interest in buying the dip, and that's always a positive factor that you want to look for in a bullish market. Now, the key structure on this chart remains, of course, the moving averages. I'm looking at the 50-day and the 100-day moving averages, and for the most part of the last year, the ASX 200 has been above the rising moving averages, and that structure is associated with bullish markets. And I think that while this condition is present, trying to pick tops in the ASX 200, I think that's a losing game. When prices are making and are above rising moving averages, the odds favour more highs to come. I think that's the most likely scenario for the ASX 200. Want to go over and have a look at the equal weight. The equal weight ASX 200. That tells us some important information too. I think overall what we see in the equal weight, I think this supports the bullish case for the ASX 200. Just looking at this latest price action, we have a strong rally off the January low, and that rally has paused just beneath the all-time high. So this blue line above takes us back to the all-time high. I've just got it there for a reference point so we know where it is. So the recent rally, strong rally, just beneath the all-time high, and we've since had a pullback back towards the moving averages. I like this week's price action. Prices have been consolidating the recent gains, so consolidating this rally off the January low. And what I think is important here is that the rally's been holding onto its gains, and this is a big thing. When a market can rally strongly, pull back, hold on to most of its gains, it's suggesting there's that interest there in buying the dips, and it's also a sign, of course, that buyers are stepping up, and that's what you want to see. We could see some more backing and filling. Like, it wouldn't be surprising at all if this market continues just to back and fill for a week or two, or some relatively short period of time. But I do think this is setting up for a break to the top side. I think we're looking at new all-time highs in the ASX 200 equal weight in the not too distant future. Of course, anything can happen, but that's what the price action is currently suggesting. Now, just quickly, I'm just going to go through two of the key market segments, because I think that's telling us some interesting stuff too. First of all, having a look at the mining index, or the materials, I should say, which houses most of the mining stocks. Materials look like they're going to attempt a rally. Just looking at this price structure that we have, the price action since the November low. So I'm looking at this point here in November. The price action since there, it looks like there's a basing structure going on, and the way that we're now starting to see early signs of rising lows, with this latest low in January, the market pushing up above the moving averages. Materials have been range bound for the better part of the last 3 years. You can see this large range that they've been trading in, and they are still within that range. That hasn't changed at all. But I think what we're seeing with this latest price action, I think it suggests that maybe at least we may be coming into an environment where we start to see the materials index start to move towards the upper end of its range, at least some attempt to maybe see the market rally over the near term, which of course is supportive to the ASX 200. And of course, the other key sector is the financials, and this remains in a strong trend. Prices came back to the moving averages during December and January. They're now rallying off those moving averages, heading up to new highs. And this is, again, a bullish sign, and I think it's generally good for the market overall. I think this is an environment to be long stocks, an environment to be actively looking for opportunities. The sort of stocks I'm looking for are either going to be stocks in emerging trends, which are like just coming out of basing patterns and starting to break higher, or maybe stocks actually in established trends, which are continuing to break upwards from consolidation patterns. And this is very much the sort of thing which I'm doing with Motion Trader. I'm looking for those momentum signals to identify the opportunities, and then using those risk management strategies. And I think this is where I believe by doing that, I think that's where I believe you put the odds in your favour of getting those good gains whilst being able to manage risk. Now, if you're getting value from this, please hit that like button. Please leave a short comment. Just tells YouTube you're watching, you're engaged. YouTube shows other people, helps me heaps. Please do that. Now, let's jump over to the US market. Now, this has been an important week. Here's the S&P 500 here. Now, this has been an important week for the S&P 500. The bullish trend has had another test. The bullish trend has had another test during the week with, of course, the threat of tariffs. Now, we saw a swing of about 3.5% from Friday's high down to Monday's low. And once again, the dip has been bought. And this isn't the first time the market has come back from a seemingly bearish development. So don't forget this false break that we had back on the 10th of January. That was on the back of an employment report, which was strong and looked like it might delay interest rate cuts. So that was a bearish breakdown there. But as it turns out, it was a false break. It was short-lived, and prices quickly rallied again. Something similar happened after the emergence of that Chinese AI about a week back, and the market then rallied off that. What we currently have is a market that is resilient to potentially bearish developments. I've seen that 3 times just in the last few weeks. And when a market can't sustain a sell-off, and the selling, and when we do see selling, when that selling doesn't attract further selling, particularly in the case of like a false break, it's a sign that the bullish theme remains dominant. I think that's a situation we're currently in. Just looking at this latest price action, the S&P 500 had a strong rally off that January low, and we now have a corrective-looking zigzag structure. So just quickly draw that. See this? We see this quite often in markets where you get that zigzag corrective type of movement. And I think when we see that type of price action appear, it's a sign also that the pullback is choppy, that it's overlapping, and again, that's typical of consolidations. And importantly, what's happened is that the S&P 500 has held on to most of the gains from this rally off the January low. That's also a sign that buyers are stepping up and accumulating this whenever there's a dip. What we can also do, we can put some Fibonacci retracements on. Let's use that January low. We go up to the high point. You can see this shaded area. That's the Fibonacci retracement region. And it's come pretty much right smack into the middle of the retracement zone. So this is around the area where a new rally could very much begin from, should this prove to be, as I think it may be, a corrective structure, which then leads to new highs. But this is one thing which we should always bear in mind. We should never be one-eyed when assessing a situation, and we should always be open to considering other possibilities. Now, I was asked a really good question in the comments last week. It was about bearish divergence appearing on the weekly charts. So let's jump over to a weekly chart and go through this. And now it's divergence using an RSI. So I'm going to put an RSI on and go to my indicators. Here's the relative strength indicator, the RSI. And what you can see here is that S&P 500 has been rising, but you look at the RSI, and the RSI has been in decline. So that's what we'd call bearish divergence, and this can be a warning sign of a weakening structure within the market and a warning of a potential top. Now, divergence is something that I take into consideration, but it's not a signal. It's not a sell signal on its own. Rather, I use it more as it's more of a condition that can support other factors. So I'll look at divergence and then I'll see what else is happening to try and form an idea or a scenario around what could be happening. Now, the tricky part of divergence, and this is nice clear-cut divergence, but the tricky part is that there are quite a few instances where it just doesn't play out. And if I sold every time there was some divergence present on a chart, I'd often be left behind as the market kept rallying. I'll show you an example. So we just got to go back a little bit in time. So we're going to go back to this period here during 2013 to 2015. Now, this is a heap of divergence. So you see the market rallying. Now come down to our RSI, and we've got all this divergence. Now, ultimately, the market did have a correction, but it took a couple of years of constantly rallying prices. So if you've spotted this divergence early and started to sell up, you start missing the gain. So this is the thing with divergence, particularly when you're looking at it on a weekly chart. So it's I think it's worth being aware of, but I'd also suggest using in conjunction with other factors. And I think the positive setup and some of the other factors we've been discussing currently outweigh the divergence that we're seeing when we look at the weekly chart and put on an RSI. And just coming back to the daily chart, I think the overall consideration for me is that we have is just looking at the price structure. The S&P 500, we've got these rising moving averages, 1,500-day moving averages continue to rise, and prices above the moving averages. We also discussed the market's resilience to sell-offs, the bullish setup that we're getting around the recent rally and pullback to the averages. For me, these outweigh that presence of divergence that we just went through. Just quickly to finish this section off, I'm just going to have a quick look at the Nasdaq. And what's interesting with the Nasdaq is prices are really coiling up. Look at this tight coiling of the price action in the Nasdaq, and it's also along the moving averages, the rising 1500-day moving averages. Prices have rallied. Now they're consolidating into the moving average in this compression range. And this type of pattern, in my experience, this type of structure typically resolves to the upside. Now, this isn't to say that the trend won't change. It invariably will. At some point, the trend will end and it will turn down. But at this stage, the trend remains up. There's nothing here at the moment suggesting this market is peaking. And this is where I think the money is to be made, staying with the trend, investing in the direction of the trend until we have clear signs that condition has changed. For me, it's a case of being focused on what's working, focusing on indices that are working, focusing on stocks that are working, and giving the prevailing trend the benefit of the doubt. That's been the strategy all year, giving the trend the benefit of the doubt through all these pullbacks, giving the trend the benefit of the doubt. We can then manage risk of a reversal by using wide trailing stops. I talk about these all the time. It's about giving the market plenty of room to move around, trying to see off these regular consolidations that we get within rising trends, but then also having that plan for selling when the trend actually does turn down, which will happen at some point. That's why I think an exit plan is always an essential part of every strategy for investing in the market. Okay, so we're going to jump over to the small caps in a minute. The ASX, the small ords and the emerging companies are particularly interesting. I want to show you those. I've got the commodities. I've got a couple of stocks for you. I've got all your stock codes we're going to go through. But of course, that wraps up the free section. So if you're not a strategy session member, there's a link below. Click that. Come on in. You'll get the full replay from the day, and you'll also be able to participate in next week's, live session. And it costs you very little. So think about doing that. Click the link below. Come and join us. All right. So let's start. Let's start by jumping over and having a look at the Russell. We'll start with the US small caps.